Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Rivian continues to be one of the most talked about stocks on the market, in part because it's got such a big potential when compared to companies like Tesla. But there are a lot of questions that the company needs to answer before this becomes a really great business and viable investment long term. So those are the questions I want to go through today. I have 5 big questions that I think Rivian needs to answer, and we're going to hear some of the answers at least on May 9th when the company reports earnings. My name is Travis Hoyam. Thank you for watching Rive Investing. Please subscribe here on YouTube and check out my newsletter, Asymmetric Investing, in the links below. I'm going to be covering a lot of disruptive companies, a lot like Rivian. So if you're interested in Rivian, I think you would really love Asymmetric Investing. The first question that management needs to answer is really a pretty simple one, and it's something that we're going to hear about, is are we still on pace for that 50,000 units of production in 2023? We did hear, based on their first quarter numbers, that it seems to be that they're on pace for that. But every little update is going to be really important for Rivian, and any way that they could beat that number instead of falling a little bit short like they did for their 25,000 unit target in 2023 is really going to be a positive for the company and the stock. This is a company that needs to ramp production extremely quickly just to get to cash flow break even or somewhere near cash flow break even. So any progress that they can make on meeting or exceeding that 50,000 unit number in 2023, I think is going to be a real positive. So that's the first thing I'm going to look at. We're going to get an update in a few weeks. The second that I would love to get detailed numbers on is what is the backlog? This was really the most shocking thing in the most recent earnings report, is they stopped reporting how many reservations they had. This was something that Rivian has reported since becoming a public company and then suddenly stopped reporting it. So we don't know exactly what to make of that. Indications from some competitors like Tesla and Lucid indicate that demand for electric vehicles and even reservations in the case of Lucid are actually falling. So that's not a great sign for the industry overall, especially in that high price segment where Rivian is producing vehicles. But I would love to hear exactly what that backlog looks like. And management kind of skirted around the issues last quarter. Any details that we can get there, any indication whether they have enough demand to fill all of the production into 2024, those are the kind of things we're either going to get a solid number or at least some indications of where the company is sitting. The third question is around unit costs. Are the unit costs starting to come down per vehicle? We should be starting to see that as production ramps up, but we really need to see what margins look like and what management says about those unit costs, because getting to break even on a per vehicle basis is going to be a really critical milestone for Rivian to get to. And the faster they can get there, the better it's going to be for operations and ultimately for the stock. I also want to get an update on cash, not only the cash burn level, but what is the cash level itself at? The company did raise money from a recent bond offering. So that's something that we're going to have to put into the mix. They're taking out more debt, which actually adds more risk to the company long term. So that's not great news, but they should have a significant amount of cash. Had about $12 billion of cash last quarter. I would expect a similar number based on the amount of money that they're burning on a per quarter basis, and then that recent debt raise. So that should give us an indication how long the company can last with the current level of cash and the current level of cash burn. But you'd like to see both the cash burn level come down and the cash level stay at an elevated level. So we'll get some more details on exactly what those numbers look like, but that's something I'm going to be watching very closely in earnings. And the final thing is, what's the status of the Georgia plant? We don't have a lot of details of what that plant looks like, when it's going to be operational, if subsidies from the state of Georgia and local officials are going to actually come through. There's about $1.5 billion in subsidies there that are kind of up in the air. So any update that the company can give is going to be really critical there, because that's where the R2 vehicle is going to ultimately be made. And I don't know that Rivian can get to cash flow positive with just its single normal Illinois facility. I think that they're going to have to add that Georgia facility to get to cash flow positive. So the faster they can build that, the more subsidies they get, the better it's going to be for the company. Any details that they give there would be good, but I would like to see that production move up to 2025. I think it's ultimately going to be 2026 or later, because that's only 3 years from now. But anything that they can tell us on that, answer questions about exactly what the facility looks like, what it's going to cost, what production is going to be, when it's going to ramp, those are really questions that management needs to answer for Rivian right now. What questions do you have going into this earnings report? This is going to be a big one for Rivian. I'm going to be watching it closely and covering it here on Rive Investing. And like I said, if you're interested in Rivian, check out Asymmetric Investing at the link below. I think you'll really enjoy that content there. And Rivian might be a company that I cover in the future. So thanks for watching, everybody. And I'll see you here next time.